Welcome back to the Mortgage Heroes Weekly Podcast Show. I'm Andy.
And I'm Brian.
And I'm Will.
Okay, guys, today we're going to talk about the front lines. What's going on in real estate? We got a couple stories we're going to talk about today, some scenarios we're going to discuss, and what we're actually seeing in the market. Let's get it going. Go ahead.
All right, let's get it going. So let's start off the bat. Really, what's been happening? What type of offers have you guys been seeing? What type of financing is popular right now? I'm going to go ahead and get started with saying, so this week we closed out a loan, and one of the specific things about this file was that it was a client that was selling their current house to then buy the next property. And what happened was that, it took a little bit of time to find their replacement property. Keep in mind that this is one of those situations where the client had a $1,300 payment, or I'm sorry, $1,900 payment. 2.375 rate, but their situation just didn't allow for them to stay where they were at. They had a kid that's growing, they had a dog, they needed more space, and obviously just it didn't make sense to be in a little condo. So they actually had to purchase a house. The payments significantly went up. It is.
Brian, $1,300.
1913.
Jesus.
Yeah.
And you have a dog with you. That's great.
So essentially, they took some time finding their replacement property, and that's one of the things that I wanted to break down. Where right now, that's the biggest thing that sellers are facing as well. Once they go on the market to sell their house, then they got to turn around and find the next property, and then they run into that everlasting issue that there's still no inventory.
Yes.
So it did take a few weeks to find the property. We actually had a period of 17 days to be able to identify a property. Took a little bit longer than that.
Wow.
But we found it. We got into escrow, and then one of the things I wanted to mention, when in escrow, it's all about communication. Everybody needs to be playing, their role. Everybody is relying on one another to get the ball down the field. And in this instance, I won't blame fault or anything, but there was something missed that impeded us from closing on the time that we were supposed to close, and then that rolled into another issue, and it took longer to get this finished. But what I am going to say is that at the moment that you're going through escrow, make sure you're always asking what's next, what's happening, what can you expect, because there's always something that might sporadically happen, and no transaction is the same. No transaction is perfect. Nobody, closes A, B, C, and it happens like that. Make sure you're asking questions. Make sure the people that are guiding you, you're referring back to anything you don't understand, because down the line, the last thing you want is to ask your people that are guiding you, why wasn't this told to me? Why didn't I get this question asked before? Why didn't they ask me for this before? So, it's a team effort. At the end of the day, everybody needs to communicate. If you didn't understand something, ask, because then down the line, you won't be surprised. And ultimately, as a professional, be communicating. Even if you don't think the communication is good or positive, you still have to communicate. And, as loan officers, we sometimes have to deliver bad news. And, most of the time we like to deliver great news, right?
Absolutely.
But it comes with the job title that we deliver bad news as well. But ultimately, communicating, breaking it down to my client, we wear multiple hats here. So
Absolutely.
The other day I was a therapist all day. But you know what? That's the stuff that we do to make sure that we make our clients feel comfortable and understand that they're making the right decisions, and we're there to back them up.
So it's like, how am I doing, Dr. Brian?
So if you guys wondering how I'm doing, I'm hanging in there.
No, but that actually makes perfect sense.
Yeah.
It's just like football team.
Yeah.
You got one quarterback, you got, the center that's going to hike the ball. If they don't hike it right, it could go sideways, right? You fumble the ball, 100%. Whatever it may be. So these things do happen out there. Mm-hmm. I use that analogy only because in a transaction, we got what's called an escrow. The intermediary party, they're actually the ones that take in, they're kind of policing the file, per se. Then we have title. Then you have an underwriter. You have a processor. We have a borrower, sometimes two, maybe even three. So it's about everybody picking up the slack. So totally agree with you. Somebody could impede in the transaction and just causes that delay. There's too many people in the cookie jar.
Yep.
So that's a great story. One of the things I like to share with my transaction is new builds.
Yes.
We all love our new builds.
Oh boy.
There's certain documents that we need. So, when escrow doesn't give us what we need, we can't get the party started, right? Mm-mm. And so one of the things I always do, because I have purchased in the past brand new homes, and I understand, the delays that can go with it.
Right.
So usually what I tell clients is expect a delay. If they say it's going to close, let's just say September 15th, I'm going to go closer to like October 15th. It's going to be about a month delay, maybe even at times more. And it all depends if it rains, guys. Mm-hmm. If it rains,
they're not building.
They usually, it's like 2 or 3 day delay for every day that it rains.
And this past May, it rained a whole month, so that's your month. There's a month delay.
You know, what's funny is I represented a client that got into escrow, their offer accepted towards the end of 2021. We just closed last month.
What?
That's
2021?
2021. And there was just delay. Well, obviously, you know, this whole year it's rained.
Yeah.
So that kind of put each day is about 3 days. So imagine how many days it rained.
Dang.
Yeah. So it took us pretty far out.
Wow.
You know, it was, excuse me. And then towards the end for the occupancy, well, we need electricity on for that property.
Yeah.
So we have the electric company that couldn't set up the.
Oh my God.
So long story short. Go ahead, Andy.
No, I was saying it just keeps going down. It just keeps one thing is like the next domino, then the next thing to falls, the next thing goes.
That's correct. That's correct. So these are the things that we're facing. This is the real world things.
Yeah.
You know, and this is out of our control because we rely on the third party for everybody to do their job.
You know, I was having this conversation the other day where, you know, people have this sometimes this misconception from the outside looking in that like life is just amazing as a loan officer and life is just amazing as a realtor. Everyone is killing it. Everyone's closing all the time. Everyone's making hordes of money. But it's like, no, hold on. There's a real side of this where there's a lot of real work that gets done. There's a lot of real impediments that can sometimes like their head can pop up out of nowhere, and you got to figure that out right away because it just stops progress. So
absolutely,
you know, I know it's not really a myth we have to clarify for like our past clients, but you know, maybe you're watching this, you're listening to this, and you have that misperception, and I'll be the bearer of bad news. Like there are some cloudy days because they're actually difficult. But that's also where you build that tenacity as a professional that then helps other clients and that same client that the tough files with, right?
Yeah.
You become better in that, and then you become better because of that.
Yeah.
So that adversity actually can strengthen that muscle of resilience when other future difficult times might be facing you
absolutely.
ahead.
And there's a lot of things that go into it, right? Like your interest rate. We saw how volatile rates are. Mm-hmm. So if you bought a property in 2021, imagine that. Oh yeah, we could put a 120-day lock. Well, we're way past that.
No.
In this case.
Wow. Do you think they could extend it?
Yeah, exactly. You see what I mean? So
you have a 1.5 year lock?
Dealing with somebody that has experience like myself, that in the new homes, you know, for me, the client wanted to put a lock a long time ago. I'm like, let's just float this. We don't know when it's going to get done. And luckily, we didn't follow the instructions of the builder because they kept saying, oh, we're going to close in March. We're going to close this. We ended up closing until just last month.
Wow. Man,
you know what I mean? Crazy. So pretty crazy,
I
crazy
hadn't
things.
heard about that. That's nuts.
Yeah. Another one that's happening right now is new builds are actually providing solar.
Oh, okay.
And they're giving you the opportunity to either finance the solar or to lease it. Most of the time I say, hey, if you're going to buy it, might as well just put it into the sale of the home. And so let's just say it's a $20,000 and they bought it for $500,000. Now we need the appraisal to come in at $520,000.
Yeah.
If the appraisal comes in, now it gets financed in. But what happens is with escrow, they won't give you your fees so you can start your disclosures until you agreed, until they agreed to that. So now it's imperative that the client actually makes a decision faster.
Yeah. Wow, so that advances that.
Correct, because we were in escrow for, you know, we got in escrow and it felt like that because the client didn't agree to that until like 2.5 weeks later.
Oh, wow.
But we're in a 21-day close because the house is already built.
Oh, okay.
Very different story in this case.
Christ.
Yeah.
You know, and so those are the things that cause some delays.
But I think that also, but I think in the new build scenario, this actually advocates to this whole argument we make like constantly, which is being prepared. Like this is maybe one of those things you have to add to that like checklist of things you're thinking through. Is like, if that new builder is going to have solar, what's your choice going to be? Or if they're offering it, what kind of option do you want to have so that you're not waiting that long and then therefore maybe inadvertently causing your own delay.
Yeah. So it's just, again, setting the expectation, right?
100%.
So expectations got to be set up front with the lender, with your builder, with your realtor partner, with your spouse.
Right.
There's a lot of just...
Always with the spouse.
Right?
Yeah.
Just set the right expectation. I just wanted to share that.
One of the perspectives I have been hearing from borrowers and people that I've been speaking to is, people are almost more keen on wanting to buy a new home when they compare the houses of, the price of a house that's, maybe 20 years old compared to a new build. They're like, well, if I'm already going to have or $5,000 payment. I'd rather have a brand new house than, a house that might need some work down the line, or maybe even a year, or as soon as I get in, I might already have to work on it. And I think that's interesting because, down the line, the houses are brand new, but eventually still stuff's going to go wrong.
Oh, yeah.
And your payments right off the bat are going to be way more expensive than you think when you go the route of a new build. Why? Well, because there's HOA, because it's a brand new development, depending on what area it is, but most of the time it's going to be new, so there will be an HOA. Tack on a high mellow roof for the new development that will last you 20 years. Did you really get a good deal, or are you just paying a lot more to have a better house?
Yeah, it just depends, I guess.
In the eye of the beholder. Yeah. No, but it's a good point. Because there's all these advantages, and you see, and we had talked about in a previous show, like new builders are back. There's a lot more new homes coming onto the market. I should say a lot more, relatively speaking. Yeah. There's a lot more new homes coming on the market, but it does come with those caveats. Like, yes, everything might be new, but if you go to try to repeat all those same things that a new house has in an old one, you're going to spend a considerable amount of cash updating it and bringing it current, let's say.
That's it.
So the new smart home technology, getting solar on your property, modifying any electricity that you need if you're going to actually have an electric car or something you got to plug in, that might require some changing as well. Yeah. So those considerations will require cash or additional financing in addition to buying the old home.
Absolutely.
One thing I heard that I thought was interesting, and I wanted to hear you guys' thoughts on this, is a lot of people are saying, and actually this YouTube channel I listen to, it's called Reventure. The guy mentioned that that right now there's a lot more Airbnb houses compared to listings in certain markets. Wow. Some of the ones he messaged was like Tennessee, Idaho, North Carolina, and certain parts of California. What he's predicting is that future pacing, they're gonna eventually not make the payments on the type of loans that they got, which he made a really good argument that a lot of these investors picked up these properties with DSCR loans or, investor savvy type of loans products. And what he's saying is that what's going to happen once these investors stop making their payments or the ratios aren't there to meet the demand for, what they got the loans for. Yeah. They're expecting that that's going to cost, a wave of inventory because a lot of these short-term investors aren't going to be able to pay their debts anymore because they're not seeing the same revenue that they were seeing a year, 2 years, maybe even 3 years ago.
Wow.
Right. So I'm not sure. I don't know how true or how quickly this will happen, but they're expecting, a lot of that inventory to flip and start getting sold because of the fact that, for example, there was somewhere in Tennessee where there was about maybe like 400 Airbnb listings and like 37 houses for sale.
Wow.
Yeah. And it
That's
could
crazy.
very well become that, but it's conditional, I think, on how much leverage they have as a group or as a whole house divided. And then, again, what kind of financial pressure are they under? Maybe they can wait it out. Maybe it's worth it for them to wait it out versus sell. It just
some of the like the revenue numbers were below 50% in certain areas. Some of them were upwards to 60%. So yeah, it's bad.
That's gonna start getting your attention. Number one. Number two, you're gonna start doing some quick math.
That was the reason why I kind of saw it as like, oh wow, like that's come on, like you're really like you're losing out money every month that you keep this now. Yeah.
So if you're thinking of doing Airbnb, do your due diligence.
Do your due diligence in the market more than anything because you don't know what's gonna happen around if it's growing or not. But definitely find a mentor, find somebody that's an expert in that because that's going to be the fastest way for you to minimize your errors and your casualties and losing money.
You just said it. Find a good mentor.
Find a good mentor. That's my best advice I could say.
Well, what kind of financing is happening right now? Like I know that there's been some chatter around the office about like, okay, VA is making a little bit of a comeback, but then also there's this FHA versus conventional dogfight happening. Yeah. So let's talk to me about that a little bit.
Well, the great thing is VA, again, it's just no money down, right?
Yeah.
So our veterans, if they're active, they just pay a funding fee that gets financed into their loan, which is no big deal. That's not a deal breaker. As a matter of fact, it's a deal maker. Yep. Either way, especially being in San Diego, if you're going to invest here, we're such a big, huge military town, they're still buying it. Yeah. Either they're going to go rent for the same price, right? You're renting a 2-bedroom, 2-bath here and for like anywhere from $2,800 to $3,600.
Yeah.
Mm-hmm. So if you can just pay at $1,400 more and get into a single family residence with 3 bedrooms, well, that's a better deal.
Yeah.
Because even those are renting already for like $5,000.
Yeah. It's ridiculous.
So it's pretty crazy. So a lot of times it's just owning is just going to outweigh the renting depending in the area you're in. That doesn't always necessarily factor into every city, every state, etc. But that's what we're seeing. So 100% financing, the way they look at it is I don't have to put the money in. I could just worry about the closing cost.
They're already getting the BAH coming in anyways to cover the housing expense.
That's correct. So. That's correct. And so, the way they look at it as well is I'm starting to see it come back a little bit more with the 2-1 buy down depending on how you're negotiating getting all that stuff. So
really
that's pretty cool, you know. So it just depends with that. And that's what I've been getting more of. But there is a buzz with the FHA now that they came out with the MIP lowering it down to 50.55% from the 0.85%.
Yep.
You know, so those things are actually now people are more curious, like, well, what does it look like if I get a lower rate because it's federally insured?
Yeah.
One of the things I noticed, it does come down to the credit. Since conventional, it's tied to your credit, your MIP. So depending on your credit, if you're going in the minimal credit with a conventional loan, you should check out the FHA route because that MIP might be a little bit cheaper, and you know that might save you a few $100 on your payment.
Yeah.
But I mean, it's just accessibility and having different options that, you know, makes it right now very lucrative for buyers. And the fact that, you know, I saw a video where it's like, you know, rates are at, let's say 7% right now, and nobody's in the market, right? Let them drop down to 6%. Then somebody else will start coming. Let it drop down to 5%. Then more people start coming. Let it down to 4.5%. Now you're back to freaking swarming like more than 30 offers. So like Will likes to say, pick your poison, pick your hard.
Pick your hard. Yeah.
You know, so maybe down the line, once rates do come down, there'll be a lot more houses, but then the terms and how you're going to be buying the houses, the prices are going to come right back up because of the competition that's going to be in the market.
Correct.
So...
And pretty sure most of the consumer already understands if something's, you know, federally insured, then the rate's going to be a lot, you know, lower than a conventional loan, only because conventional is not insured by anybody.
Nope.
It's by the mortgage insurance companies, right? But with VA and FHA, it's insured.
Yeah. And I mean, like FHA, if you don't have, you know, a VA loan, I mean, definitely leverage an FHA, 3.5 down payment. If the numbers make sense, leverage that and then use that to get your foot in the door. I think it's definitely a good idea.
Either way. Yeah. So that's the best way to prepare, especially now we're starting to see even in open houses, they're kind of almost.
Yeah. So talk to me about open houses. So like what's happening out on the street on the weekends?
I was at an open house this past Sunday, and I was speaking to the listing agent, and she was telling me about how the house has been in the market technically for 70 days. Yeah. The reason being is it was an escrow with the military company. One of the first things that happened was that the complex wasn't VA approved, so they had to, you know, get that VA approved. That was one hurdle. Down the line, it turned out that the buyer wasn't actually fully approved for that purchase. And that's when things started coming down.
Yeah.
So one of the biggest things that I do, you know, advise anybody that's looking to buy a house, make sure that the lender you are using is sending you a DU, a desktop underwriting approval. Make sure that they're sending you a pre-approval letter. Make sure that they're sending you some sort of breakdown that you could see the monthly payments or understand what it is that you're going to be paying. And if they go above and beyond and give you a call to break it all down, definitely ask all your questions that moment, because down the line, I guarantee you're going to have more questions once things start getting a lot more serious. You start submitting offers, you start seeing houses, you start getting excited. And then once you get your offer accepted, you get your closing cost estimates, and then that's where all your questions come. Where if you were prepared beforehand and asked all your questions, you would be expecting already what you know that you were going to get. So my thing is make sure that you're keeping all your parties honest. You know, ask the questions that you need to ask. If it sounds like a dumb question, ask it anyways, because down the line it's going to be a silly answer once you think, I should have answered that from the beginning.
Especially if you're trying to buy a house, like ask the question.
Especially if you're trying to buy a house, like don't expect that it's going to be what you think, and then just let it drag on. Like at the end of the day, it's going to come out. You're going to say, why did they tell me? Why didn't they say this? Do your due diligence up front and make sure that your people that you're working with are honest, and keep checking them and refer back. Don't be afraid to ask for advice from other professionals, because turns out maybe you're not getting the best deal, and in this instance, they weren't. And sadly, they didn't get the house and discouraged the military buyers. And then, you know, that's exactly what we try to, you know, avoid.
Yeah. No, I get it. It's important. Be prepared with all that stuff. It's all about your surroundings, who's representing you. You know, it's in this type of market right now, you're going to need a good realtor that's going to help you negotiate.
That's it. That's
you know,
huge.
so that sets you up for success. You know, you need the right loan officer to really position you in the proper space where you can have the options, or just understand where you need to be payment wise, etc. What's your budget? And that's one of the things that we've been asking more now. Before it wasn't such a thing, but now when your payments are anywhere from $5,000 to $7,000, it's pretty crazy.
$100 will make it or break you.
It is.
Yeah, it can. It does, especially at certain levels. That even though it may sound like a small amount, it could make literally the difference of doing or not doing it.
Yeah. Here's the other thing. I mean, coming up with that, you know, understanding, preparing yourself, and just knowing what's out there. You know, I'd like to know more of what the process So
Yeah.
people are starting to ask the right questions. What I'm noticing when we're in escrow, well, what's next, right? So one of the things is what's expected is, okay, we enter escrow. I put my good faith deposit. Well, where does that go to? Who spends that money? You know, and so it's like, no. This goes into an actual escrow. As a good faith, you put a good faith deposit, you know, and it's usually 1% of the purchase price. It's kind of like the rule of thumb out there. You know, it used to be just like $500, $1,000.
Yeah.
I haven't seen that in a long time.
After COVID, they said anything to make the offer look good, throw in 3% EMD.
You know, so these are some of the things that happen, right, Brian? And
Yeah.
Saying that you have to explain everything and put everything in perspective for the buyer. This is another thing that we want to talk to the buyer.
Yeah, and I was gonna say, you mentioned ask the right questions. You know, asking the right questions will give you the right answers. And I know it sounds, you know, silly, but it's so true that, you know, if you don't ask the right questions, you're gonna get different answers that might not give you the answer that you're looking for and confuse you even more. You know, once we get into escrow, there's a lot of moving pieces, and that's something that's very difficult to explain to somebody that isn't in our world, right? Yeah. There's an escrow, there's a title, there's a listing agent, there's a buyer's agent, and then hold on, why are these TC things calling me?
Who is that?
Who is that? What is this? You know, but at the end of the day, it's, you know, you also have a responsibility to, you know, be on top of what it is that's happening, right? Yeah. Just because there's two people that are guiding you, a lender and a realtor, doesn't mean that your hands off and, you know, everything's their fault and, you know, you have nothing to say. Well, what they're doing is they're guiding you based on your decisions and what you're looking to accomplish. So the more clear you are with what you want or what you're looking for or the questions you have, the better answers the people that are guiding you are going to be able to provide for you. So for example, once you get into escrow, you get your offer accepted. It's not just offer accepted, loan approved, congratulations, funded loan, everybo's happy. No, there's some process to this.
Yeah. Come on now, Brian, are you sure?
Will, trust me.
Yeah.
Sure. I've been through it. But what I'm saying is that, like, you know, essentially, you know, there's an appraisal process, there's an approval process that even after your loan's approved, you still get what's called conditions, which means things that you need to fulfill in order for your loan to be fully approved. And then even then, once you do submit those, they have to get reviewed and cleared. After they're cleared, then you get what's called the clear to close. Only then can you actually have documents ready to be signed and actually move forward to the closing table. Yeah. But all these things happen in the back end, right? And I always get questions like, hey, I didn't know about this. Hey, I didn't know about this. Well, hey, we didn't either. That's why it gets conditionally approved. But this is what we need in order to get that sufficed. Yeah. And I think that's a huge piece that really just gets kind of watered down in the process, where it's like, hey, there's going to be, you know, stuff that you need to get back to us at certain times. There's going to be documents that we don't know that we're going to get asked, but because the bank saw certain things in your financials, now they're going to go ahead and do a little bit more digging to get more clarification to what that is. So just make sure that you have a good, thorough explanation in the beginning, and always write down and you know, keep note of what it is that you doesn't make sense for you, and ask. Don't be afraid to ask. Keep asking, and if you don't get the right answers, go look from somewhere that you will.
Yeah, that's correct. I mean, I like that you bring up that conditional loan approval, because that's a fact. The underwriter, when we get the best analogy that I use is I'm your attorney. You know, I have to get all the documentation. Those are the exhibits. And so what I have to do is turn all that into the judge. Yeah. The judge is, in my translation, the underwriter, right? They look at all the evidence, make sure that, everything's good. This person's actually, not guilty. Yeah. They actually will get approved. Yep. Right? And so based on that information, they can do that, but then you have another arraignment later down the line, right? To revisit the judge and see what other information, evidence you have to provide it based on what you've done. The judge gets to see that and says, hey,
this is the final sentencing.
Yeah, you were actually going faster than you thought, right? In this case, hey, I noticed that your bank statements, you actually made this large deposit, because we have to prove that the earnest money deposit cleared your account, but now there's a big deposit in there.
What is that for?
So now we have to paper trail that, and that kind of puts a delay on things.
Yeah.
You know, or people just acquired new debt. They went ahead and bought a new car, a new boat.
They got excited too fast and bought some furniture.
There you go. There you go. So we see these things, and all those things put a delay. Yeah. And then here's the other thing. Once we clear that, we have it clear to close. You get your final loan document signed. A notary can go in there and just didn't sign something right.
And it's happened before. It's happened a lot of times. Yeah. One of the things that we do want to mention towards the end, a lot of people have the misconception that once you find your final loan documents, they get that back to the escrow or lender, it's click, fund, done. It really isn't like that, guys. There's still another line of defense that the funding department and the escrow company go back and forth dealing with what's called funding conditions. These funding conditions are things that I don't even know what they are, but I know that escrow and them taken care of. So it'd be miscellaneous disclosures, miscellaneous invoices, and stuff that is part of the transaction, but not in the main transaction, but is needed in order to be able to close and fund that loan.
Yeah. This is where title needs to provide a preliminary report that's within a certain amount of days. This is where escrow, they have their own conditions that they have to fulfill. So they have all these things. And if they delay there, then that just means we're not going to fund.
Yeah. And unfortunately, down the line, it always comes back to us if it doesn't happen. But, that's why I go back to communication. If you're able to clearly communicate what's happening, what's occurring, how it's going to happen, the solution you have for it, and why it happened, it will minimize, the stress without having to have, chaos.
That's
Communication is key.
So to break it down, escrow open, fully submit loan for approval. Yes. While
at the same time ordering your appraisal.
Request an appraisal.
Getting your approval back with conditions.
From
hopefully
the underwriter.
Getting your appraisal back as well. Submitting all conditions and getting them reviewed by underwriting, and then hopefully getting your clear to close and no more conditions based on what you submitted.
And that means the underwriter signed off on everything.
Boom, here's a stamp of approval. You're good to go. This loan is ready to go to the next step.
Perfect.
Yeah. So then once you get to the next step, clear to close, docs get sent over to escrow. Once escrow gets the docs, they prep them, contact the notary. Notary contacts buyer, signs documents, make sure all documents are signed.
That's when you sign your life away.
There it is. And then they get sent back to escrow. Escrow then still needs to shuffle the papers around, organize them, and then send them back to the lender. Depending on the lender's funding times, then they'll let you know exactly if that loan will get funded the same date or whatever their turn times might be for that.
There you go. Only thing we missed right there was a CD.
Once
your interest rate's locked and you have your homeowner's insurance, that's the biggest delay right now has been obtaining homeowner's insurance. So if you get into escrow, start looking into getting your homeowner's insurance, because a lot of companies, State Farm, Farmers Insurance, they pull out of California. Right?
Out.
Oh, yeah. So those are so important to go after. A lot of my clients, I tell them, go to USAA.
Yeah.
I actually hold a relationship with a good local homeowners insurance company. So they usually get that. I send a quote and we try to give them the best savings, best bang for their buck, depending on the coverage. So that is one of the biggest delays right now that I've been noticing, right? So once those three things are there, we can go ahead and assign what's called a CD.
Yeah.
That's a closing disclosure. Now you can really see what your closing costs are, because all that gets adjusted because there's usually padded,
Yeah.
And so once you sign that, legally they have a 3-day right of rescission period where the client can say, I don't like any of this. I want to sign. I can peace out. I'm still within my contingency period, so I can go ahead and just pull out,
Yep.
So that's the cool thing. We talk about 3 business days, okay? And so we also consider Saturday being a business day.
Yeah.
Okay. But if we have a holiday weekend on Monday, let's just say that's not going to count.
Not going to count, right?
Okay. So any federal holidays do not count into 3-day rescission.
Yep.
And then that's how we're able to sign that. So after we meet that 3 days, that's when, rightfully so, the client can sign there.
Yeah.
And boom, that's it. Soon
and
we go have a party at
your celebration
at their house.
Yeah, that's right.
We're almost done.
Celebrate after that.
Choo.
Yep.
I know.
That was good.
Interesting.
Well, there's a lot.
That was a lot. No,
there's
that was
a lot
good.
going on in the Frontlines, guys. It's a great conversation about kind of what we're seeing for loans, what you're seeing actually happen at open houses, even with pre-quals, the process. Super good information.
Yeah.
I'm sure there's going to be some questions that follow up. So if you have a question for William, you have a question for Brian, go ahead and write that in the comment box, or you can DM us, or you can email or call them directly if you have a specific question that pertains to your scenario to help you buy a home in 2023 or beyond. But you guys, thank you so much for a good conversation today. Thank you so much for watching and listening. And remember to subscribe to the channel and follow the show on YouTube, Google, and Apple, or anywhere you follow your favorite podcast. We'll see you again next week.
Yeah. Later, guys. See ya.